So made a video the other day about interest rates and what they're doing and all of these things. So I talked about generally a lock is 30 days. And someone I think said, I'm under construction and I can lock for, my lender let me lock for 100 and something days. So generally speaking, the locks run in 15, 30, 45, 60, sometimes 90 days. It's lender, like the lender has the option to choose how many days they want to give the borrower as an option to lock. So if you were to lock on a 30-day lock, the cost of that's going to be less than what the cost is for a 90-day lock, because the lender is taking on the risk of the market going up, and now they are locked in on the rate that they gave you, and now it's a 0.5% higher, let's just say. So it's going to cost more because it's more of a risk to them. Now, I'm not saying not to lock in, because obviously we saw what happened last month in March with the rates and how quickly they moved, and they're projecting that they will potentially move again in May. So depending on when you're supposed to close, how far out you are, how good your credit, all of these factors play into, hey, how great of an interest rate am I going to get? And I would just take that into consideration, maybe talk to a financial advisor, talk to the lender, your family, and figure out, hey, Jordan, can you tell me how much, if we were to lock today, how much a 90-day, a 60-day, and a 30-day at a 5.5%, how much it costs to do a lock in those increments? And then you can figure out if it's worth you financially to go about locking it now or holding out. So just something to think about, and talk to your lender and sit down and figure out if it makes sense for you to do that or not, which it very well may be in the market that we are unfortunately in right now. Especially if you're like hitting the top, like you were barely scraping by qualifying, it may potentially be worth locking in and paying a little extra fee for the longer lock.